So most traders look at price and try to force trades, but ICT taught us something different. Time is the key, all right? And every week the market follows a rhythm, a weekly profile. And today I'm going to break down the 12 most important ICT weekly profiles that you need to know. How to spot them, when to expect them, and how to help you frame your trades with confidence. So what are weekly profiles? Weekly profiles are frameworks, okay? They're not fixed predictions. They help identify common patterns in weekly market behavior, right? Each profile reflects how price interacts with time from Monday to Friday, high time frame PD arrays, premium and discount, liquidity pools. These profiles are crucial for building weekly bias and planning your entries. So for the classic Tuesday low of the week weekly profile, on Monday the price is going to accumulate or hover above a high time frame PD array on the lows. Can you see if I do a line here? Uh, let's say here, okay? And then on Tuesday, that price will get tapped right here, and that'll create the low of the week. All right, so Monday it chills here, Tuesday drops below a high time frame PD array, most commonly in London or NY session, and then price is going to rally for the rest of the week. Okay, so Tuesday creates a low of the week. If Monday doesn't tag discount, watch for Tuesday drop, pretty much is what that means. So for the classic Tuesday high week, it's the same thing, right? If price on Monday doesn't sweep a liquidity or a high time frame PD array in premium, and that happens on the Tuesday, you can assume or expect Tuesday to be the high of the week, and the rest of the week to kind of go in a downhill. This is all based off a higher time frame trend as well. If the monthly and the weekly is bearish, and this is a good way to look at the next weekly candle. So you have to understand that all these candles here are going to be forming that weekly candle at the end of the week, right? So if you think your next week drawn liquidity is lower, it would make sense that this happens. If you think your next drawn liquidity is higher, it would make sense that this happens, right? On the weekly, that is. Same thing here, but this is a Wednesday low of the week for a bullish week. So let's say you think your drawn liquidity is higher and you're bullish, and Tuesday sweeps a high, and then Wednesday sweeps a low. You can expect Wednesday to be sweeping the low of the week, right? And then creating the rally here on the end. So again, you have to align all this with your trend and your drawn liquidity. If your drawn liquidity is higher and Tuesday pushes higher, doesn't quite reaches that point, drops down, takes out liquidity from Monday and Tuesday, and then starts rallying again, you can expect the rest of the week to be bullish, right? On the contrary, here for Wednesday, however, the week it's the opposite. If you're bearish on your weekly, and your drawn liquidity for the week is lower, and Tuesday you drop lower, you don't quite tap that liquidity, you then push back higher, taking out all the liquidity created on Monday and Tuesday, you can expect Wednesday to be the high of the week. This also works if Monday, Tuesday you're consolidating, right? You could be consolidating for both those days here, and then be creating that sweep here to create that AMD type of move where you accumulate here, you manipulate on the Wednesday high, and then you start distributing after on the Tuesday and Friday. For the consolidation Thursday reversal, you're going to be accumulating, just kind of like hunting liquidity left and right, and like kind of like staying in the same range. And then once you drop on the Thursday in that discount area for your bullish week, you can expect Thursday to then fly back higher, right? So let's say you're accumulating your whole week, you expect your drawn liquidity to be higher, your trend is bullish, you've been accumulating all this time, right? Thursday, you get a manipulation or a drop back into your discount to then target the next drawn liquidity higher with the discount PD arrays, and that's very good. On the contrary, here for the bearish profile, let's say you're bearish on your week, your drawn liquidity is lower, your trend is bearish on the weekly, on the daily. You get that push higher on Thursday, sweeping the liquidity of the rest of the week. You can expect this to be top of the week to then target back lower. For this particular here, you can expect news to set this off to move this market here on the Thursday. Usually that's what happens. This one right here usually aligns well with 2 p.m. news release like FOMC. This is the one I was talking about before. For consolidation midweek rally, you're consolidating early in the week, and then your Thursday, Friday, you break out higher. That's because price hasn't reached a high time frame premium yet, and there's no bearish signs. So once you reach your premium, you can expect a pullback and then a move back higher, right? I don't know if that makes sense. You need to always align your weekly profile with premium, discount, time, and also your drawn liquidity and your trend. So I'm gonna explain it one more time. You start your week on Monday. You push on to Tuesday to hit your premium. Once you're in your premium of the range, drops back down below. Hit discount on the discount. You can go higher, targeting the highs. This is the same thing, right? But the opposite. So you start your week high. You're bearish on the week. drops down on Tuesday, pulls back up to premium, and then target back towards the lower side here. The seek and destroy is pretty much in a bullish news. This is a range trading technique. Um, so let's say you're bullish on your week, but markets you've been accumulating. You can kind of see that it's always staying in this range here. You can usually target sessions high or London high, Asia high, and just kind of like go for intraday trades at this point. And then at the end of the week, you can target higher or lower here, depending on if you're bearish or bullish. It's important to say that these two usually show up in July or August, where there's lower probability, near news, and it's best to trade those with an S&P divergence or something along those lines to make sure that you can identify the manipulation and know when the high has been put in and the low has been put in. So this is pretty much just a Monday to Tuesday consolidation, and then a sweep of the low drop to discount, rating the sell stops, and then a big reversal to follow. It often marks major high time frame bottoms. This one, and this one's the same thing, but for bearish scenarios, right? So you consolidate early week, drop to a high time frame PD rate in premium, and then drop back lower. Again, align it with your trend and your drawn liquidity. If you think your drawn liquidity is lower and you see the displacement towards it, then you can align your weekly time frame with it. This usually marks tops as well for longer periods of time. You can pair that with an SMT divergence and then a fair value gap for confirmation around here. So for final tips and applications here, always map your high time frame premium discount zones. Use these profiles to build your weekly bias, not the exact trades. And they work best paired with draw liquidity, high time frame narratives, trends, SMTs and fair value gaps, and EQ and OTE for execution. You don't need to guess anymore. The market runs on structure, not randomness, so you can apply one of these at least for every single week. And every candle is going to be opening and closing, right? And there's going to be prices in betweens. These are usually the common denominators. And if you can identify them, it'll make your week very, very high probability. This is one of the reasons why I usually don't trade on Mondays, or I go very, very low risk. Because Monday sets up the rest of the week, and then you can identify your weekly ICT profile very easily after that. So if this helped, guys, hit like, subscribe. I'm dropping the real Smart Money Academy content every week, no fluff. My full Smart Money Academy and the ebook are going to be available very, very soon, free. For free. You can follow me everywhere at JDTrades21 on Instagram and TikTok. It's JDTrades2105. And if you have any questions, drop them in the comment below. The Discord is also in my bio if you guys want to learn for real. I trade live every single day, $100 to $50,000 challenge. So yeah, catch you guys in the next one. Peace.